I want to talk about just a recent play that I got some insight in. So I want to talk about no PG business vehicle financing. Okay. So again, one of the advantages, of course, of putting a business vehicle under your name, you get to depreciate it over a certain amount of time. It's a business expense of the business. And then also too, you can pretty much, versus like having a vehicle in your personal name, it's not going to increase your DTI. So I want to give you guys the play on, so it's BMW Financial Services, right? The data points on how to get no PG business vehicle financing, right? This is something that I just recently became privy to. So pretty much they're going to be looking at Dun & Bradstreet to look to see what type of trade lines you have on your business credit report. Now, I'm not going to lie, I've been a critic of D&B because as some of you know, like it's been very like overly marketed, like, hey, build up your Paydex and go get a business loan or a line of credit, which, a lot of, I mean, Rad, you talk about this as well, like how the vendor credit doesn't unlock, traditional commercial loans and lines of credit, for the most part. That's kind of hyped up, right? But I will say, based off the data points I had a conversation with the finance manager at BMW the other day. And so he was basically telling me how they are able to give you no PG. There's a couple steps to it, right? So they look at what's called comparable credit, right? So pretty much what that means, let's say if you're trying to get a car that's, I don't know, 100 grand, let's just say, for example, they're going to look to see what type of previous, auto vehicle loans that you have, right? And usually if you don't have comparable credit, then you're going to have to do what's called a personal guarantee. So they're looking at your auto loan history, right? To determine, okay, because there's two different paths that you can go. So if you do have comparable credit, you can get business vehicle financing without having to do a personal guarantee. It's just going to be under the business, but you need that comparable credit. However, let's say you don't have comparable credit. Like recently, I didn't have comparable credit. And so pretty much what I had to do what's called a personal guarantee. So I'm just going to share kind of like the data points that they asked me for, right? So if you want to put a vehicle under your business and you don't have comparable credits, they're going to want to see, and this doesn't have to be audited. This could just be like from your QuickBooks. So they're going to want to see a balance sheet, and a P&L, right? For the past 2 years.
Okay.
Now, some people might be wondering, like, okay, because one of the things is like, having to have a lot of paperwork. Sometimes that's like kind of discouraging, but what I will say is that I recommend any business owner just get set up with QuickBooks, right? Because once you get set up with QuickBooks, you can basically configure your account to where it's you could just download the reports as PDFs, and these are not audited. These are just just basic. So this scenario I'm giving you, if you don't have comparable credit, right, they're going to want to see a balance sheet and a profit and loss statement. And then that's pretty much it, right? They're not going to want to see your tax returns or anything like that. Just the past 2 years balance and profit and loss statement. And then they are going to require a personal guarantee. And so unfortunately, there's been a change in sort of like auto lending right now, because as a lot of we're in a recession. I mean, I don't care what the government says. We're in a recession right now. So they did a triple pull, right? A triple hard inquiry, right? All three. And again, these may not be like, okay, like, why are you telling me this? You got a PG, they're pulling off. I'm just giving you like the data points so you kind of know what to expect, right? So this is for if and let me just put a little caveat: if you do not have comparable credit, this is the route. This is the PG route, okay? So let's say you go this route one time, right? You go, you buy a vehicle, you pay it off or whatever, or maybe you don't finish paying it off. So then when you go back the next time, you're going to have comparable credit. Okay. So then the next time, so on your second vehicle, you can get what's called 100% corporate liability or no PG. Okay. So in this case, they're not going to pull your credit at all. They're just going to look at your Dun and Bradstreet because according to them, they pull your DNB and they pull your personal credit. But on the business financing application, they ask you to enter in your DUNS number. Okay. So they're going to pull your credit, to see, okay, they're going to pull your DNB first to see, okay, do you have comparable credit? And then it's kind of like a decision like, okay, yes, you have comparable credit. You can go the corporate liability route, or you don't have comparable credit and you're going to have to go the PG route. That's just kind of how it worked. And then, so yeah, that's pretty much the play right there, in terms of if anyone's wants to kind of understand if you're looking to get, let's say, a no PG, it's not just a matter of let me just get Quill, Uline, Granger, get an 80 Paydex and then go there. No, they're going to want to see, okay, do you have comparable credit? And pretty much, that's basically it. And from then on out, you can go to different dealerships, outside of that, like, Porsche Financial Services, other places, and you're going to have the comparable credit. And so, yeah, that's pretty much a play. I just wanted to throw this one out there because this is like fresh in my mind. So just for anyone who.
Let me ask you this, Plug. So once you do this play, right? Like once you do the one thing when you're doing step one, and then you go for the second vehicle, 100% corporate liability. Can you also do this with exotic vehicles as well? So like, can you get exotic vehicles with no PG doing this type of play?
Absolutely.
Can you break that down a little bit? Because that'd be super informative for people that want those, McLarens and them Lambos and Ferraris and stuff.
So let me add some context to this, right?
Okay.
So for those who know, I just bought a new BMW XM. It was like $160,000 or whatever. So you can get this example that I'm showing you as well. Also, the other condition is for vehicles over $100,000.
For over 100,000.
$100,000 plus.
Wow.
So you can potentially get for vehicles less than 100K. Let's say you want like a I don't know, like a M3 series or something like that. You can, I don't know why you would, because it's not over the weight threshold that you could depreciate it, but less than 100K, you can get no PG without the comparable credit.
Okay, that's key.
Okay. Without comparable credit. Now, again, you can get, like I said, you can get an exotic car with a PG. That's perfectly, that was my scenario because I didn't have comparable credit. I just had, high income and high personal credit. So it's not always so, but if you want like the high end vehicle with no personal guarantee, you're going to need comparable credit with a vehicle that you've paid off that's over $100,000. Okay, so like with this scenario too, once you have that first vehicle that's like over 100K, that's when the banks are going to feel more comfortable because you've demonstrated sort of the that you have the capacity to pay off that type of vehicle. Now, pretty much my strategy with this, and again, I'm not a financial advisor or anything like that, but anyone who is like thinking about getting an exotic car soon, financing it, one thing you have to keep in mind is that like interest rates are much higher today than they were maybe a year, 2 years ago, right? So even if you have like a really good credit, you might be paying like 7% interest, maybe even more, maybe like 9%, depending on the vehicle. So what I would really say, if you're looking at that, I would look at it more as like a tax strategy play versus like trying to finance it, you know, because again, when you look at the overall like total finance charge, you know, it's a lot different paying 9% on a $30,000 car versus a $200,000 car. Like the finance charge, if you are to stretch it all the way out, it's going to add, you know, extra 50 grand to the car, or you know, whatever, depending on how much it is. So that's just one thing. So like this right here, let me just highlight this right here. And again, this is with BMW Financial Services, right?
Okay.
So there's also, I also want to give you guys another play. Now, again, all these plays aren't easy type of plays. Like some of them, you do have to have certain credentials and qualifications.
Yeah.
Ford also has a corporate fleet program, right?
Yeah, I heard about this. Yeah, break this one down. This one's a good one.
Corporate fleet program, right? So pretty much you can get, I believe it's up to $250,000 line of credit, pretty much. And that basically allows you to finance like multiple vehicles under the same line of credit. So like instead of applying multiple times, you basically can just can apply for a line of credit, and then when you're basically when you're adding new vehicles, you don't have to go through an underwriting process every single time. And so the only catch with this, right? They want 3 years of 3 years of business tax returns. Okay.
Yep. Yeah, we won't dumb this down for everybody, because we got people that are just starting businesses to like that have established businesses. So we don't want to dumb down the content for anybody. He's just going to go in his bag. And
I'm just throwing it out there, right?
I love that. No, I appreciate that. That means a lot.
Okay, so you know, this is cool. You know, like I said, a lot of times when you hear the no PG, and let's talk about that too. Shout out to my boy Real Estate Trap, because he put out a video the other day talking about small business credit versus corporate credit.
Yeah, he's a beast. Shout out to you too, Trap.
Yeah. So you touched on this too, and I think it gets convoluted sometimes, right? Let me give you guys an example. Let's just go to truist.com, right? For example, okay? So you guys see up at the top here, right? You got personal, you got small business, right? This is what we talk about, you know, lines of credit, stuff like that, okay? And then you have corporate, commercial, and institutional, okay? So these are going to be large corporations, and we're talking about, you know, Walmart's, Microsoft, Google. I mean, maybe not companies even that size, but these are going to be places that are, you know, businesses, larger enterprises that are generating millions of dollars, right? So this is going to be different than small business credit, right? I would say like 99.999% of even like the business credit that I talk about is small business credit. There's a different set of rules. Small business credit, normally you're going to have to personally guarantee it because it's a small business. Now, a small business can be considered a business that's making less than $5 million, which when you think about it, you think 5 million, that's a lot of money. Right. But in the business world, that's a small business. And there's different considerations as well. Like, for example, another example I want to share with you guys as well, American Express, right? So American Express, let's see, for example, right? You go to their cards, they got personal, business credit cards, and then corporate programs, okay? The American Express corporate program starts at, you need to be making generating a minimum of $4 million a year. That's the minimum, okay? And there's no personal guarantee. You're not personally guaranteeing anything. But the thing that people, the point I want to make with the personal guarantee is that it's okay, it's cool, right? If anything happens with the debt, you're not personally liable. But think about this. to even get to the point where you're getting no PG, your business is going to have to be established to a certain degree where you have business assets, you have tremendous business revenue. So, okay, it doesn't fall back on you, the individual, but it will fall back on your business that's established and probably has assets and revenue. So it really is like in a point of kind of like, separating liability. Yes, it protects you, the person, but if you've built up a business to the point where you're at that corporate level, you don't want to default on the debt either way, because it's going to fall back on your and destroy your corporation's financial reputation, right? So I just want a little side rant right there.
Love that. That's good.
So while we're on the topic of like vehicles as well, I'm just going to throw these data points out here as well. Hyundai also has you can get business vehicles as well, personal as well, and they are going to be pulling and again, you guys can verify these as well, but I'm just going based off of my firsthand data points. So they were pulling Equifax. That's just a random thing.
Business Equifax or personal Equifax?
Personal and business.
Okay.
If you just want a personal, then it's just going to be personal.
Okay.
Hyundai. Let me also talk about this, because this might be an old data point. So Truist has business vehicle loans. Actually, my other business vehicle, I got financed through Truist. So the way they work, and this is something to be careful of, because I know Truist is becoming one of the more popular financial institutions right now. Mm-hmm. You basically need, before you apply, these are just things to just keep in mind, because this is something that I actually made the mistake of doing 2 years ago. So you want to get a bill of sale, right, with the out the door price. Okay.
Why does that matter? Tell them why that matters. Yeah. Break that down.
So you want the out the door price because you don't want the price to change. Like, when you go there, they're going to say, oh, you get extended warranty, get a tire package, get all of this. Yeah. You want to tell your salespeople, give me the out the door price. And this includes taxes, registration, everything, out the door price, final price. This is the number that you're going to get put on the check that gets cut. Okay. Mm-hmm. So you want a bill of sale, right? The other thing you want to do is you do want to put down a deposit, and this actually goes before the bill of sale. And I'm going to explain why. And it's kind of weird the way their process works, but you want to put down a deposit. And it doesn't have to be. It could be like $100, right? You just give them a check, right? Put down a deposit to reserve your vehicle, because what might happen is, if, let's say, the VIN number changes. If the VIN number for Truist, if the VIN number changes, it's considered a new application. So then they'll hard pull your credit again. Okay, so. That's why you want to put down a deposit. So I just want to put this fact. If the VIN number changes, it's like a new, it's like a completely new application. It's kind of similar to, like, let's say with like real estate investing, right? Yep. Like when you're buying like a owner occupied property, you usually just get a blanket approval letter, and you can use that same letter to go shopping. But when you're buying an investment property, the numbers changes because it's based off of the let's say if you're doing like a debt service coverage ratio, it's going to be based specifically off the property. Each property is considered a separate underwriting. That's the same thing with how they kind of work. So if the VIN number changes, you're going to have to do a new application, right? Mm-hmm. And so that's something I learned through trial and error. New application, okay. And of course, they're Equifax all day. Okay. Equifax all day.
Personal and business on both of them, both double.
Personal and yes, and they report to Equifax Business.
That's good.
This is a gem because
that's really good.
Equifax Business. So there's a handful of banks that pull Equifax Business. Well, at least there were. So I'm not so sure about Citizens Bank because, as some of you might know, they switched up. They're now in hard pulling Experian.
Yep.
But they also report to PayNet. Now, PayNet is important because PayNet is financial trade data. Now, let me for those who don't know what PayNet is, not Paydex, but PayNet.
Yeah.
Because it gets and so PayNet is actually owned by Equifax.
Yep.
A lot of people don't know that.
Yep.
So pretty much what PayNet is, it's financial trade data, right? It's lines of credit, it's credit cards, it's not net 30s. Okay. Let me see if I could just pull up a quick example of so it's really commercial banks use PayNet to see, okay, what is your your financial, financial history in terms of like lines of credit, loans, equipment finance, and all of that gets reported to PayNet. And Equifax actually bought PayNet. So now like anything that reports to Equifax Business is also going to make its way onto PayNet. And PayNet is important for loans and lines of credit. And I'm gonna go into a couple institutions that actually do pull PayNet because at first I thought maybe it was a little overrated, but it actually comes into play for financial trade data. But anyways, going back, where was we at? Right here. Okay. I want to wrap up in terms of like the car financing stuff, right?
Yeah. And after you're done with that, could you also tell people like a good lender for like a food truck and maybe like semis and trucking? Maybe you know some of those.
Okay. Yep. So okay. So let's go over
Plug is good on the spot. Isn't he good on the spot? You're good on the spot, bro. Like, yeah.
It just flows.
Freestyle
right?
Friday, bro. Like 8 Mile of the credit plug gems, man. Like, you just come on now. Let's go. So we have a lot of people in trucking. They don't know where to go to get financing, right? We have a lot of people that want to do food trucks, right? These and even maybe like a camper, like an RV or something like that. Like, what are some of your good things on that? And we can kind of move on from all the transportation.
Okay. Yeah. I'll go over that right after this.
Okay.
So one thing that's a game changer right now is what's called car putty, right? So think of this, instead of getting a loan every time you want a car, it's basically like you get a line of credit. Ooh. And so you can put the vehicles on the line of credit. So you just apply once.
Yes.
You just apply once. And then, so you're going to get, let's say, like a $200,000 line of credit. You can put multiple vehicles on there, right? And you can pre-qualify, no impact to your credit score. You do want to have like a 680 or higher on Experian. And this right here is like a game changer, right? They have this little illustration where it's like the old way of buying cars. You every time you want to purchase a car, refinance a car, you have to get a hard credit check. With car putty, you get a line of credit.
Wow, that's so good.
You pay down the line of credit. It's a fixed rate, and you just pay down the line of credit. And then once as you have available credit, you could add more cars to it and stuff like that. So, anyways, with them, so you want to have 2 years of credit history, 680 or higher. Wow. They do look at your DTI and your payment history. And so then right now, though, I want to say they're in a lot of states. I don't know if you guys can see down here, but
Nevada, bro. Ohio, though. That's what's up. Buckeye State.
No, Maryland, though. That, you know what I'm saying?
It's all good, man.
They got DC and Virginia. So
I'm about to move to Phoenix, bro. I'm about to move to Phoenix. AZ. Shout outs to him. Man.
Right. So definitely check out Car Putty, man. I know a couple people who've gotten like, lines of credit, and they also have them for business. So on the business side, the lines of credit go up to $800,000. And I think on the personal side, I think they go up to 200 or 250. I know someone personally who just got $190,000 line of credit.
Wow. And it reports the business credit, or is it completely doesn't report?
Right now, they're not reporting.
Well, still, you get in the line of credit, it's not reporting to
Right.
your personal, which is a big deal.
Here's the thing. You know how it is, like with fintechs, sometimes it takes even a couple years before they report, because sometimes like to get the data furnishing license with like Equifax, Experian, TransUnion, you have to have a certain amount of customers first. So I think I want to say with Experian, you need at least like 2,000. So like a lot of times, like with fintech, like when there's a brand new card or brand new product, sometimes it may not report immediately. Some of y'all might remember that, like when the Apple Card first came out, it was like a hidden trade line. Like it didn't report for like the first, and then eventually it started report. But from what I recall right now, Putty is not reporting. So like, at least for now, not to say that's going to be like that forever, but for right now, if you do wind up, using it, it's not going to show up on your credit report. It's not going to impact your DTI. So like, that's amazing. That's a game changer right there.
That's amazing.
Mm-hmm.
That's a gem for sure.
So let's go to you said like in terms of like
trailer. Yeah, you like semis or whatever, like the trucking industry, box trucks, like whatever, like a lot of people like in trucking would like financing, like where would you recommend them to go?
Okay. Yep, I got you. So this is more so let's go over this. This is it's called eCapital. So they're specifically geared towards the transportation industry, the staffing industry, healthcare, wellness. So like this is another example of like a direct lender that's like they have their specific industries that they tailor to, right? So like, for example, I can't apply here and get funding, right? But if you're in trucking, transportation, they got a lot of different products for you, right? So they have what's called an eCapital line of credit, right? So pretty much, as it says right here, so it's available when you factor. So you can get, I think, up to 2,500 per truck.
Wow.
And so this is going to be, available for people who are specifically in the trucking, 18-wheelers. So whether you need money to cover bills, repairs, whatever,
great.
Right? They also do invoice factoring. So this right here is, and then they give you, they'll give you like a Visa card. So they have what's called the, let me see if I could pull this up. Okay. So they have like a little Visa card that they give you with $10,000 on it.
Wow.
Yeah. Yep.
Wow.
So let me see if I can pull this up real quick. Yeah. So this right here, eCapital Visa commercial card. And again, this is going to be on the business. Is going to report to Dun & Bradstreet.
Wow.
The only thing, like I said, it's restrictive to certain industries. Like I can't apply for this because I don't fit the business model. You know what I'm saying? But for those who are looking for it, I try to sign up as an affiliate for them, but they didn't accept me. But it's all good. I'll still promote them. So yeah, check this one out for those. Now to go back to trailers, one that is Balboa Capital.
I've heard you talk about them before.
Balboa Capital. They're actually owned by Ameris Bank.
Oh, wow.
You guys know Ameris Bank?
Oh, for sure.
Yeah, Ameris Bank is they're in like, I think they're headquartered in like Jacksonville. I remember driving through Jacksonville. Florida. They're like they have a big skyscraper in downtown Jacksonville.
And their credit cards with Elon Financial. So.
Yep. But this is like their equipment financing division. So they focus on like equipment financing up to 250,000. And so another thing with them, they report to PayNet.
Nice.
This is another one I want to. And so equipment finance, one thing people don't really, equipment financing is one of the best ways to build business credit because it's considered a financial trade. It's an installment loan, but it's also secured by the equipment. So it's going to be much easier to qualify. And I actually somewhere in my email, I have the underwriting guidelines for Balboa Capital, and the credit scores can go as low as like a 500. Wow. Like no cap, like as low as like a 500. So yeah, their business model, I know for a fact, equipment financing, trailers, stuff like that.
Can you kind of briefly explain what equipment financing is for them? I've explained it before, but I love your vernacular and how you break things down like a researcher. So like what, in a nutshell, what is equipment financing? Can you tell them what that is?
Yeah, equipment financing, it's a form of secured lending, right? Where the equipment is collateral for the loan, right? Mm-hmm. And so with equipment financing, there's a lot of advantages because I talk about like the tax advantages with like buying a vehicle. You can apply the same things with equipment financing. And then with equipment financing, it's going to be easier because again, it's a secured lending, and secured lending, because there's collateral behind it. If you default on it, they just take the equipment back. You know what I'm saying? So basically with this, it's they're just looking at they'll look at your business credit, they'll look at your Experian as well. I have these notes somewhere because I'm actually a broker with them as well.
Nice.
They go as low as like a 500, and again, they report to PayNet. So wow. It'll help. Like if you let's say you want I don't know, some equipment, making those payments is going to help with your PayNet. So like once let's say you pay off the first thing, you get the first piece of equipment, you can go back and get higher amounts. And I think for up to 150,000, I got to get my notes. As a matter of fact, let me I'll pull that up on a separate screen.
How do you like this, me like feeding them different questions? It's like, man, what about this? And then him going, do you guys like that format? This is pretty fun. I'm loving this, man, because I'm trying.
Yeah, no, for sure. So I'll pull that up and come back to it while we continue to go over some other stuff. I'll come back to this because I'm gonna pull this up on my other email account.
Yeah, no worries.
So let's go into some business lines of credit, man, because that seems to be the hot button.
And I have a ton of people in ecom too, specifically my man Dennis down there, Dennis the Menace, man. Miss you, bro. Hope you're doing well, Mr. Elon.
I got a couple gems, for that too. So I'll actually share this with you, Rad, and you can send this out to the community.
Yeah.
Oops, there we go.
Yeah,
Radikal Marketer. Yep. Boom. All right. So let's just go over some of these. Now, some of you, if you've watched my channel, you may have you may have come across some of these, right? So we're just gonna go over. So these are the no hard pull lines of credit. Or actually, I take that back. Not all of them, but some of them. So the first one I want to tell you guys about is called Revenued. I think I talked about this. They're actually with FinTel Connect. So I'm an affiliate with them. So pretty much this is a fintech company. Now they're really looking at your cash flow. So you got to connect to like Plaid. Right now, so they have a little special where like, all right, you spend $5,000 in the first 3 months, you get $500 statement credit, and you get 3% cash back on every purchase.
Wow.
And so, as it says right here, there's no hard pull. So they're not pulling your credit. Now you do have to put your social security number, but it's for KYC purposes. So for those who don't know what KYC, it's a banking compliance. It stands for Know Your Customer. Yeah. So they're doing it more for identity verification.
Yeah. Us crypto people know what it's all about, man. We don't like that KYC for
So this one is pretty. So like I said, the main data point with this is that you want to have cash flow into your checking account. So
how much cash flow? How much cash flow would you think?
So ideally you want to be generating at least $3,000 a month.
Okay. Yep.
Money flowing into your account, right?
Okay.
If you're pre-revenue, or if you don't have the revenue, if you don't have the transactions, And then another thing too, another little data point about this as well. You guys could take note of this. It's not always about how much money you have in your bank account, right?
Right.
It's they look at more than that. Some are looking at the activity, the frequency of transactions, and the source of the transactions.
Yep.
So sometimes what I get, you know, when I used to do like funding calls where, you know, I'm just trying to analyze like, you know, what someone may qualify for, and I would see people doing peer-to-peer transfers back and forth to their bank accounts. That's not going to work with a lot of institutions like this, right? Because they're looking at the source of the transaction. So is it coming from a point of sale system? Is this from an invoice? Is this from a merchant account? What's the source of the transaction? So that matters as much as, or even sometimes more than just having a bunch of money sitting in an account that, you know, there's no velocity, there's no movement. So that's the case with this. Like they're looking beyond just like, you know, someone who just has like $100 grand sitting in their account, but there's no transactions, there's no activities, right?
Mm-hmm.
So that's basically this. Again, they're not pulling your credit, and they're just looking at the banking activity. So this is through a fintech. It's called Sutton Bank, or the bank behind it is called Sutton Bank. They have like a fintech incubator program where, you know,
They have
they
a lot of people in there, right? Sutton has a lot.
Yeah, they back a lot of fintechs. So yeah, that's just one
Does
thing.
this build business credit? And who does it report to?
From what I understand, no.
Okay.
At least not yet. This is because again, like this is a new company. Like I think they've only been around since 2020, maybe.
How big do the limits go up to with this?
100,000.
Whoa. Okay. Well, you got my attention. So this goes up to 100,000. They're going to check your business bank account, right?
Mm-hmm.
And so this would be also really good. It's also a flex line of credit as well, it looks like, right?
Yeah. So not only can you swipe it, but you can actually draw down on the limit.
Okay. How's the interest on it? Is it pretty high just because it's, you know, kind of fintech type of stuff or what?
Yeah. So they basically work like I don't know if anyone's familiar with like factor rates.
Okay.
So you know what a factor rate is basically, it's not an APR, right? It's basically like a fixed fee kind of thing.
Yep.
So that's pretty much how they work. So yeah, it's a flex line, and you know, you could swipe it as well. You can get money out the ATM or transfer to your bank account. So
money out the ATM too.
Yep. Mm-hmm.
Okay. So this is really good for e-com.
I don't know.
Don't know.
Maybe. There's some different things for e-com that I'm going to go over, but
what would be this ideal for?
I think this would be good for. Yeah. Well, okay. I take that back. E-com, or if you're like if you're selling physical goods. Or like a restaurant, or you know, something where you're turning over product. Because again, some lenders, they want to actual like, they want the brick and mortar businesses.
Gotcha. And this
for
is
whatever reason, their underwriting might be geared towards like, okay, they want you to be selling something, producing something, things like that, right? So I think, and this is for, I would say, high transaction businesses. Okay. Like if you're just on, if let's say, you know, you're like me and Rad, you know, we're on YouTube and we get our YouTube check, that's not really going to be suitable for this. Yeah. Maybe I would say you, Rad, because you know, if you're doing like daily, have daily like transactions, but I would say this is not really geared towards the digital online business, or I would say the online businesses that aren't creating physical goods. Okay. So like if you have a digital product, I don't know how they really feel about that type of thing, because it's kind of a creator businesses are kind of like a new area in terms of like lending. So sometimes it's a little harder, but I recommend you can apply